If you are tired of waiting around for hours just for a setup to form, then stick around because today we're diving straight into the fast-paced world of scalping, the 1-minute time frame. This is for those who crave action. We'll break down everything step by step, from finding high probability trades to perfecting your entries and exits and to managing risk on the fly. So if you're looking to increase your profit and spend less time in front of the charts, this video is the one you do not want to miss. So what are we waiting for? We are waiting for one specific candle to close throughout the day, and that one candle is going to give us our daily bias, our directional bias, our draw on liquidity. That one candle is going to give us everything we need to frame a trade. What is that one candle? We are going to go to the 15-minute time frame, and we are going to wait for the 8:30 a.m. candle to close. Why that is significant is because a lot of news releases happen 8:30 Eastern Standard Time, New York time. So let's say we have a fair value gap that forms where this candle's high, this candle's low doesn't touch this candle's high, leaving a gap in price. So let's say we have this fair value gap that forms, and for example, this is the 8:30 close. What we are going to do is we are going to wait for this 8:30 candle to close, and as soon as it closes, we are going to look for a fair value gap for the market to trade back into. After this market trades into the fair value gap, we are going to drop to the 1-minute time frame to look for our entries. If this 8:30 candle closes and there's no fair value gap, you're allowed to wait one extra candle. So let's say, for example, this wick is higher and there's no fair value gap. This is our 8:30 candle. If there's no fair value gap already formed, we're allowed to wait one extra candle. If a fair value gap forms, then that is where we take our bias from, and we can look for entries at the retest of that fair value gap. What are we going to wait for before we take an actual trade? So let's say, for example, that this market ran up. Now we have a 15-minute fair value gap that we go from internal back up to external range liquidity. What we are going to wait for is we are going to wait for a change in the state of delivery. So that is when we go from a sell program up to a buy program. A change in the state of delivery is the formation of an order block. So let's say, for example, we've got 3 consecutive down close candles into a higher time frame PD array. A change in the state of delivery will occur when we close above the opening price of these down close candles. So when we get a bullish candle that closes above this 3 consecutive down close candles, that gives us our valid change in the state of delivery. And that is where we take our trade from. We place our limit order there, our stops below the low, and we target a 2-to-1. So we spot out the fair value gap on the 15-minute time frame, and then we drop to the 1-minute time frame to look for our entry. We are going to wait for a change in the state of delivery or a bearish version. Change in the state of delivery, we take an entry on the retest of the order block, and we target a 2-to-1. Do not manage the trade, just a fixed 2-to-1, and you let the market do its thing. Are you ready to take your trading skills to the next level? Imagine having a front row seat to real live trading where you don't just learn theory, you see trades unfold in real time, where I guide you every single step of the way. In this mentorship, you'll dive deep into strategies that makes a difference in real markets, get hands-on experience, understand market moves, and learn to spot high probability trade setups like a pro. This is more than just watching. It is a fully interactive experience where you ask questions and get feedback as you learn. So, if you are serious about transforming your trading skills and want to learn from someone who's been in the market every single day for the last 10 years, this is the mentorship that you want to join. This mentorship is designed for those ready to make real progress and not just watch from the sidelines. And if you don't want to take my word for it, go ahead and look at the results that the students are busy getting out of the mentorship. Yuri had a beautiful trade on dollar Swiss shared live in front of many students in the mentorship program, where all the analysis was done live. Nothing was pre-recorded, nothing was hindsight. As the students watch me, I go from top-down analysis all the way to entry criteria, and everything is done live. So if you are ready to learn from a market veteran, this is the mentorship that you want to join. So here we have the 8:15 candle. This candle opens at 8:15 and closes 8:30. We start on the 15-minute time frame. We wait for the 8:30 candle to open and close. Here you can see we have that 8:30 candle that closes, and above this candle, which PD array do we have? We have a fair value gap on the 15-minute time frame, and this is going to be used as a directional bias PD array. So we are expecting this market to trade into the PD array and then continue price action lower. So what do we do now? There's no need for other analysis. This is what we do. We have that 8:30 candle that opens and closes, and we do have a bearish fair value gap resting above. Now we drop to the 1 minute time frame. From the 15, we go to the 1 minute, and we wait for the market to trade into this 15-minute fair value gap. Here we can see this market trades into the 50-minute fair value gap. Now we are waiting for a change in the state of delivery. We don't get a change in the state of delivery over here, and we see a push up higher, deeper into the fair value gap. So we are just waiting for the market to give us a valid change in the state of delivery. We don't get it yet, and here we get it. We have two consecutive up close candles that takes out liquidity. We get a closure below, making this what? Making this a valid order block. So we go ahead and we can place our sell limit order at the start of the order block, and I want you to put your stop loss above the high, but 2 pips above the high. So stop loss of 4.1 will be 6.1, and we target a straightforward 2 to 1. That's it. That's everything that I want you to do. So now we had that 50-minute fair value gap. It was a bearish fair value gap. We wait for the 1 minute to trade back into this fair value gap, give us a change in the state of delivery. We take an entry on the retest of that order block, and we let price do its thing. Here you can see we get a retest. You play price forward, and we just wait for price to do its thing. And here we are out of the trade. This trade took a while. It took 2 hours to play out, and you had one winning trade. So let's mark this winning trade with a green line to signify a winning trade. We go back to the 15-minute time frame, and we wait for the following day. Let's wait for the 8:30 candle. Not yet. Here we go. This candle opens at 8:50. This candle opens at 8. Here we go, that 8:30 candle. Here we go. 8:30 candle closes. There's no fair value gap. We have grace for one more candle, and there's no fair value gap. So we skip the day. We wait for the following day to come. We wait for that 8:30 candle. Let's see. 8:30. Do we have a fair value gap? We don't have any fair value gap here, so no trade. So we go on to the following day, waiting for that 8:30 candle to come. Not yet. And here we go. What do we have here? Here we have the 8:15 candle that closes at 8:30. And what do we have below it? Below we have a fair value gap. It's a bullish fair value gap. So we mark out our bullish fair value gap on the 15-minute time frame. And we are just waiting for this market to trade into the fair value gap on the 1-minute time frame. We go to the 1 minute, we play price forward. We can see we get a tap into our fair value gap. Now we are waiting for a change in a state of delivery, which is going to happen here. We are waiting for a closure above. And there we go. We get a closure above. And so now we take an entry on the retest of this order block. Stop loss goes 2 pips below the low, 10.1. And we target a 2-to-1 risk to reward. Play price forward. We get a tap into our trade. And we let this trade play out. And you can see we are out of the trade. Let's mark that with another green line for another win. Go back to the 15-minute time frame. And we go home. We wait for the next day to come. Let's wait for that 8:30 candle. Okay, what do we get here? Here we have an 8:15. Here we go, 8:30 candle closes. We have a fair value gap above it. We mark out this bearish fair value gap. This is going to be our bias for the day. Mark out the fair value gap. Now we are waiting for this market to pull back into our fair value gap to continue the trade lower. We go back. We wait for the market to trade into this fair value gap on the 1-minute time frame. We are inside of the fair value gap. So now we are waiting for a change in the state of delivery. Here you can see we have 1, 2, 3, 4, 5 up close candles. We are waiting for a closure below the opening price of this run. There we go. We get a close below. So now we take an entry on the retest. Stop loss goes 2 pips above. So 5.9 plus 2 is 7.9. And we target a 2-to-1 risk to reward. We get a tap into our trade. Let's play this trade forward to see how this runs. And we are out of our trade. Mark this with a green line to show a winning trade. Go back to the 15-minute time frame. And we wait for the next day to come. What do we have here? Here we have that 8:30 candle close. You can see the 8 o'clock candle, 8:15 candle, 8:30 candle closes. There's a fair value gap above this 8:30 candle. We mark out our fair value gap, drop to the 1-minute time frame, and we wait for the price to trade back into this fair value gap. We can see we get a sweep above relative equal highs. We have consecutive up close candles, so we wait for a closure below this up close candles to give us a valid bearish order block. Let's see what happens. Price action sweeps liquidity again with 3 consecutive up close candles, so my order block moves up. Price action sweeps liquidity again, up close candles, order block moves up. What do we have here? Price sweeps liquidity again, 3 consecutive up close candles. We get a closure below and we have a retest. So we take an entry on the retest of this order block. Stop loss goes 2 pips above, so 3.6 will be 5.6. And we go and we target a 2 to 1 risk to reward. Playing this trade forward, and we get another win. Mark that out, go back to the 15-minute time frame, and we wait for the next day. Here we have the next day, so we wait for that 8:15 candle. This candle, there we go, next candle, boom, candle closes. We have one more candle, and there's no fair value gap to take a trade off of. So here you can see that in, what is this? 7 days, you made 2, 4, 6, 8%. So you would have been able to pass a funded account in 7 days, less than 2 weeks trading the 1 minute time frame. And you have 2 trading criteria in this method. So this is how easy I want your trading to be. There's no need to overcomplicate your trading. This is how easy I want your trading to be. Be sure to backtest this. Be sure to apply it to your trading arsenal. And if you are struggling to pass a funded account, this is a strategy that I want you to use. Guys, I hope you enjoyed today's video. I hope you found value. If you did, leave a comment, leave a like. It helps our channel and community grow a lot. And let's make this channel the best trading community out there. If you are looking to take your trading to the next level and you want me to trade live with you every single day, you see exactly how I look at the market. You see exactly what I wait for. I review your trades. I keep you accountable. I give you work to do. And I make sure you become a profitable, independent trader, guaranteed. Go head to the link in my description and sign up for the Simplified Traders Mentorship. And I'll see you in the next video.